Hey traders, Nick Shaheen here, looking at Bank of America. A couple disclosures first. Number one, I was short the stock and Goldman Sachs in the last couple of weeks. I don't remember entry and exit dates exactly. Haven't been short in a few days, but I did disclose it in two videos. My strategy for those two, and they played out great. I didn't milk Bank of America as far as I could. So I got out somewhere in the middle of this debacle. But Goldman Sachs, whew, that was a good conviction win because I sold call spreads, bought puts, and then sold diagonal puts against the long put until it played out completely one day. Anyway, long story short, I don't have a trade. So I'm completely agnostic. I'm not pushing one opinion or another. Second disclosure, I don't know the stress test results. I'm assuming they all passed. That's the base case. So now the expectation is that Monday, I think, Saturday, Sunday, overnight, I don't know when, the banks will come out and say, we're going to buy $1 trillion worth of, because trillion is a hip thing now. By the way, do you know what comes after trillion? We should start practicing because I don't think trillion is enough. Anyway, quadrillion, in case you're wondering. So to Bank of America, they're going to be among the banks that say, we're unshackled now, we can do what we want. We're going to be doing more buybacks and dividends and all of that. They probably have a lot of reserves they want to free up. I don't know if they have or not. During the pandemic, they had to take more reserves, so create a more bearish scenario on paper in order to anticipate what if what hits the fan during the pandemic and those people default on their mortgage and all of that. So they had to build it to be safe. Maybe they free that up as well. I don't know. Regardless, I think the base case is somewhat priced in. So I'm going to stick my opinion to facts. And the facts are in the chart. This is a daily chart. Everybody knows what to look for. It's nothing fancy. And the fact is, the bulls are in control. And that's why they buy the dips and they get rewarded for them. So whoever was trying to short it all along has been wrong, except for, if they had stents like me. I picked on a bearish stent inside of a bullish trajectory. So now I want to offer you, look, so are we here? Or is this different? Again, are we here or is this different? So I want to offer the opportunity here to argue both sides. I'm going to start with the disaster scenario first, so we'll get the crap out of the way, because I know it's going to upset people. And I'm telling you, I'm not rooting for this. I like Bank of America. I didn't have issue with it when it was up here. I was just picking on its stock price, and I'll show you in a second why. So this used to say buy the dip because it was falling into support. But now that it bounced hard, I changed it to question mark on 36. So now this is an alert to tell me, hey, if you're long, get out. So if I see that pop on my screen, I'll send out a note to my readers and members saying, hey, you might want to pay attention to Bank of America. There could be a 36, 35 scenario coming if it loses this. Okay, so that is the bearish scenario. I'm not calling for it, but it's there. And it's bouncing. So how can that happen when it's all the way up here? From the chart, I see in forecast that there should be sellers into 42. If not 42, just above that. That's how charts behave. There could be some exigent circumstances and it just blows through it, but they're rare. More often than not, I'm right about this. So if it does get sellers up here, then you have to look at control. So far, the bulls are in control. We just said that. Is control changing? It didn't change here, and it didn't change here. This looks slightly different, so I'm going to look out for it. Here are the lines that I have on the chart. This arrow doesn't say that's where it's going. That's how the negative scenario can play out. It's going to find, so the only thing I'm missing is the statement that this here, it should have sellers. So boy, I'm trying to do with the wrong hand here with the mouse. My hand has got carpal tunnel. So I expect sellers. It's as simple as that. I expect sellers to show up. Now, that doesn't mean go out and short it. It means I don't chase it going into here. And if it goes above here, I definitely admit that, okay, the sellers are not here, maybe a little bit higher. Then I change the level to 43 and change, because that's where they they showed up there. So on the way up, I saw an opportunity here. It played out. And then I saw a rising wedge. I drew it and I shorted it, and it played out. I got out here somewhere. I don't remember. And then it got to here. And now I'm saying on the bounce, I should expect sellers. So if they develop this habit, so that's where the logic meets. So the range is tightening, and they come to blows here. This or another pop. That would be the risk of the bear scenario. And the catalyst would be if whatever news they come out on Monday can change the game for the stock price and blow through this cluster of resistance. I think the resistance is considerable right now, so we have to look for it. The only thing I haven't done here, because I just ran out of time, I will do over the weekend, is look at the open interest. Now this is a heavily traded stock, so I bet you there are clues in there in the options contracts. So I'm going to lean into it and see if I can gather a little bit more information. So here I'm unemotional about this. I used facts from the chart to try to forecast the upside and the downside. So the upside, it has headwinds just based on any chart I'm looking at. And the downside is not there. I can't short it based on this little green-blue doohickey I drew, but I want to watch out for it. So if I'm bullish the stock, I should pay attention on that. And will the pops be sold and bang against the floor? And if so, will the floor hold? If it doesn't, it's going to here. So don't be stubborn about it, because you'll love it. If it loses this, there's more selling coming. Might have a little reprieve here and here, but this is the base that it might want to come to. So as we're here, I'm going to say, for myself, for my future self, long. So, because if it's falling out of control, emotions are playing with your mind, and it gets there and you miss on the opportunity. But if it comes to you in an email that says, long, dumbass, long, then you're likely to say, oh, okay, my future self, my old self told me to get long, maybe I will. So just a little psychological games. That's it. I didn't even mention fundamentals, because the banks are dirt cheap, but they've always been dirt cheap. They're not dirt cheap relative to each other, to themselves. Like price to book is really what they care about, and now it's a lot higher than a couple of years ago or so. So the income statement is boring, so there's no growth there. The net income, they can still make money because they know how to run money, hopefully, but nothing is going the right way for them. Like the metrics, profit margin is going down. Mind you, this was COVID, and what? Cash from operations? That can't be right. Okay, so 21 billion. I must have misread it. So yeah, no problem there. The way they show it is like anyway, bad chart. Debt to assets slightly growing, but we'll give them a pass on the fundamentals. We know they're cheap, so that's not a reason to say let's get out of it, it's too expensive. But the chart action doesn't lie. A chart is a chart is a chart. Very rarely do they come apart. All right, Nick signing out.